Good morning, everyone. Welcome to a new week and another edition of the Vetiva Breakfast Meeting, brought to you by Vetiva Capital Management in partnership with Frontier Africa Reports. Today is the 16th of August, and we'll be hearing from our global equity desk, our fixed income trader, and from Ghana, our partners at SC Securities, after which we'll have some headlines from our partners at Frontier Africa Reports. Before we begin, I'd like to remind everyone that this meeting is also being broadcast to our listeners on Facebook, as well as being recorded, and the presentation is scheduled to hold for 30 minutes, which includes Q&A. If we are unable to answer all of the questions that you may have due to time constraints, you can forward them to us at research@vetiva.com, and we'll get back to you as quickly as possible. Now we'll start with a rundown of some international and local equities from last week from our global equities desk, brought to you by Symbiat. Good morning, Symbiat.
Good morning, Joshua. Good morning to everyone. Like you mentioned, I'll be starting off in BRVM markets. The market continued its upward trend as the index closed the week 16 basis points up, with a year-to-date return of 17.29%. Although the market witnessed a decline in activity levels, with a 48% decline in volume, and turnover also fell by 36%. Dominating the top gainers chart was the consumer goods space, as we saw price appreciation in names like Uniwax, Secor, and Palm Cordova, while Safka Cordova in the financial sector led the chart with a 7.5% price appreciation. All sectoral indices closed the week positive, except for the BRVM public utilities, with a 1.26% loss. Going into today, we expect the market to trade in line with Friday's session, with a chance of activity level improving. In the Nigerian equities market, another trading week ended in the positive, as all share index gained 11 basis points. This was largely on the back of price appreciation we saw in banking and consumer goods space. We saw the likes of Honeywell, Unilever, Flour Mills, WAPCO, and FBN all gaining significant points. Boosting market activity on Friday was a 45 million cross trade in Flour Mills, which was executed at 13.45 kobo. The total turnover of that trade accounted for about 49.56% of total turnover on Friday. And from the feelers in the market, the trade was done by local investors. Despite the cross trade, the market still traded mixed, with the volume declining by 66.9% and turnover improved by about 40%. Speaking to sectoral performance, the positive close on Friday was across board. We saw all indices closing the day in the green. However, this wasn't enough to reverse the previous loss posted in industrial and insurance space, as both indices closed the week negative, with a 1.35% and 2.49% loss, respectively. For today, we expect today's session to trade mixed, with possibility of profit taking on some recent gainers, while investors continue to anticipate H2 results in Tier 1 banking names. Thank you, and that'll be all from me.
Thank you very much, Symbiat. Next, we'll hear from Omar again, our fixed income trader, on the currency and fixed income market. Good morning, Omar again.
Good morning, everybody. System liquidity improved marginally on Friday to open at 11.6 billion positive, coming from the 40.34 billion negative that we saw on Thursday. Despite the slight improvement in system liquidity, Interbank rate tightened by over 8 basis points as OBB and overnight rate closed at 16.75 and 17.25% respectively. For expectation today, we believe that interbank rate will trade at similar levels, barring any significant change to system liquidity. The parallel market remained stable on Friday to trade at 515 naira to $1, while the earning window opened at 411.27 naira to $1. The highest trade that was recorded on Friday was 412.5 naira to $1, while the closing rate was 410.8 naira to $1. Brent and WTI lost 0.3% and 0.2% respectively to close last week at $71.1 and $68.97 per barrel on the back of reduced demand for oil amid surging COVID-19 cases globally. The T-bills market closed last week on a very active note as market participants continue to cover their loss bid from the primary market auction that held on Wednesday. We observed continued interest on the newly issued one-year paper and also on the 25th November 2021 paper, where trades were majorly consummated on the CBN Special NTB, the 14th July 2022, and the newly issued one-year paper, that's 11th August 2022 maturity. Overall, average benchmark rate declined by 72 basis points to close Friday at 4.52%. The OMO market closed last week on a flat note as average benchmark rate remained unchanged at 7.5% from the previous trading session, while trades were majorly executed on the mid-dated maturities, especially on the 7th December 2021. The bonds market closed last week on a relatively calm note, with weakened bullish sentiment seen along the benchmark curve, especially on the long-dated maturities, as players continue to trade cautiously in anticipation of the bond auction that will be holding this Wednesday. We observe interest on the mid to long-dated maturities, especially on the 2036 and the 2050, while trades were majorly consummated on the 2035 and the 2050 maturities. Offers on the 2036 and the 2050 maturities improved from the 12.65% levels and 12.85% levels seen on Thursday to trade at 12.8 and 13% respectively to close the week, with average benchmark rate declining by about 6 basis points to close at 11.96% on Friday. The Eurobond market closed last week on a relatively active note as buy-side interest were skewed towards the long-dated sovereigns. The most actively traded maturity on Friday was the Nigeria 2049 maturity. As a result of the offers on that maturity, we saw rate on that maturity dipped below the 8% levels that we saw in the previous trading session to settle around 7.94% levels. Other maturities that also enjoyed buy-side action were the Nigeria 2031 and the 2047. The corporate space closed last week on a relatively muted note with few trades debt on the EcoBank 2031 Eurobond. For expectations today, we believe that the bonds market will open this week on a quiet note as market players remain on the sidelines in anticipation of the monthly bond auction that is holding on Wednesday, and also the release of the inflation report by the NBS on today. For the T-bills market, we expect it to open the week on a very active note as players continue to try to cover their loss bid from the NTB auction that held on Wednesday last week. That'll be all for fixed income. Thank you.
Thank you very much, Omarige. Before we move forward, I would just like to ask a quick question on whether you have any updates on the precise timeline for the government's Eurobond issuance and how that will impact borrowing, because obviously we're approaching the end of the third quarter, so I'm imagining they want to expedite the process. Do you have any updates on that for us?
Okay, as of now, there's no updates as regard to when the issuance will be officially done. But then, like we have already said, the issuance is going to add the much needed liquidity to the already dwindling FS reserve, and that's also going to act as a fresh supply of Eurobond in the market. Like we have already seen, when the news of the appointment of the book runners for the Eurobond came out, we saw that the long-dated maturities in the Eurobond space were being offloaded as some investors tried to free up cash for the upcoming issuance. That was when we saw the 2049 hit the highs of 8% levels, but we have slightly seen some moderation in the market. Like I already said, it traded around 7.94% on Friday. So we'll continue to watch that space. Once any news come up, we definitely update everybody.
Thank you very much. Next, we'll move to our partners at IC Securities, Daniel Asante and Johnston Asiama. Good morning.
Hi, good morning, and good morning to everyone on this call. I'll first start off with the Treasury bill space. Government of Ghana exceeded its targets for the second consecutive week at the regular primary auction last Friday. It accepted all bids tendered and raised approximately 1.32 billion Ghana cedis against target amounts of 1.16 billion Ghana cedis for 91, 182, and 364-day bills. Yields for these three tenors fell by 5 basis points, 4 basis points, and 20 basis points to 12.47%, 13.26%, and 16.11% respectively. We reckon that the increased participation is as a result of improved liquidity on the market. In the local currency bond market, the secondary market saw much activity around the belly of the curve last week, with bulk of the action seen between 2024 maturities and 2027 maturities. Significant sizes of March 2024 were paid around 17.4% levels, while March 25s dealt at 18.15%. Additionally, May 2026 and January 2027 maturities traded at 18.6% and 18.8% respectively. Few buying interests were also seen around the front end and the back end of the curve. We expect the trend to continue this week. And finally, on the Eurobond space, the Ghana curve has deteriorated disproportionately versus other sub-Saharan African curves on the back of high debt to GDP and negative outlook rating by Fitch. In addition to the global themes like the Delta variant uncertainty, inflation scares, and possible reduction in fiscal stimulus. Despite trading downwards across the curve last week between 100 and 250 basis points, it is a good entry point for new investors as the curve has priced in most negatives. Ghana 61 closed at mid 9% last week. That's all for fixed income. Thank you very much.
Good morning. And in equities, bullish sentiments moderated as gains in Unilever Ghana to 41.34%, although marginally. Turnover for last week's session was 4.1 million Ghana cedis, down by 36.2% from the previous week close, with MTN Ghana accounting for 58.8% of total value traded on the bears. For the week ahead, we expect markets to remain largely subdued as we tip foreign investors to remain on the fence. We also tip local demand for consumer stocks to continue to entice supply with aggressive pricing, the chance of markets advancing further. Thank you.
Thank you very much to Daniel and Johnson. Next, we'll finish up with our partners from Frontier Africa. I believe Faith will give us some headline stories. Good morning, Faith.
Good morning to you and a very good morning to everyone. Here in Frontier Africa Report, we'll start with an update of happenings in the eastern region of Africa. Safaricom topped the East Africa's list of most valuable firms. In Uganda, the Securities Exchange has Stanbic there, ending up being the most traded stock in the month of July amidst liquidity drops. Ethiopia is having that MTN is opting out of the second bid for telecom's license after considering the risk involved. Or I'm sure we have been probably following the Ethiopia's issue. MTN, I mean, many people are told that MTN was going to carry on with the second bid, but now there is a report that it's opting out. Moving away from that, the BAT Kenya is eyeing 3 new export markets. That's all from East Africa. In West Africa and Nigeria, the Central Bank of Nigeria is projecting that inflation might drop to 13% by the end of this year if lockdowns do not return, and if the present vaccination phase is being sustained. For CEPLAC, exchange rate of interim dividends for 2021 second quarter has been set at 411 naira in top of $10. Bricklink Africa reports profit after tax of 0.34 million naira in the second quarter of the year, while in Ghana, the country's Agri Development Bank has recorded over 400% growth for the year 2020. In the South African region, the South Africa's Finance Minister, Godong Gwana, is vowing to maintain fiscal framework. From there, we'll move on to Zimbabwe, where the NAMPAC third quarter revenue for 2021 is surging 37% on improved sales. Also, Cisco International is proposing share buyback of 10% own shares. In North Africa, I'll move very quickly. Morocco is recording 12.4% rise in insurance premiums issued in the month of June. Tunisia's trade deficit fell to $8.7 billion end of July this year, while Export Development Bank of Egypt posts low profits of 695.35 million Egyptian pounds for the 2020-2021 financial year. To wrap it up there, Coca-Cola HBC is set to buy 94.7% in Egyptian units for $427 million. That will be all from Frontier Africa Report. Thank you so much for listening.
Thank you very much, Faith. We've now heard from all of our speakers. So if you have any questions that you'd like to ask and you want to speak, you can raise your hand and you'll be allowed to speak. Or if you prefer, you can leave a comment in the Q&A box or the chat box, and we'll read out your question and have it answered. If you are joining us on Facebook, you can also leave a comment in the comment section and we will answer your question. And it appears that we have no questions for any of our speakers today, which means we've reached the end of our meeting. Thank you so much for joining us. We hope that you have a very productive day. Do enjoy the rest of your day, and we hope to see you again tomorrow. Good morning.